Hey traders, it's Chris. This is the full market analysis for Monday the 15th of September. Just catching up and seeing what's going on. There's not much, to be fair. Markets are very, very quiet. Have been for a few weeks, haven't they? But nonetheless, nothing we can do about that. No news today. Tuesday, there is some retail sales tomorrow at 1:30. Look out for that. The US dollar won't be doing much this side of that. And of course, Wednesday, we've got the big day. We've got the Fed funds rate expected to go down. Forecast is 4.25. So let's look out for that. That's the big one. So after that news comes out, we will know what's going on with the dollar, hopefully, because it's completely flatlining at the moment. Thursday into Thursday, unemployment claims, the usual stuff there, and nothing really going on Friday. So the big one is Wednesday, 1:30 GMT. Let's go into gold on steroids. Current price 36.62. It's gone up from this morning. This was the situation this morning, early doors at 6 a.m. I just spotted this on my MT4 chart. I wasn't in trading view, but nonetheless we can see this here. Once you see the price, there was a supply zone, there was a sell power of 60 plus here, so we sold it and made a few quid here. You can see a big fat sell signal. Also note the oscillator here, overbought below the 50 moving average. I repeat this all the time. Below the 50 is a sell here. Above the 50 is a buy. Above the 50 is a buy. Above the 50 is a buy. So look out for those opportunities to get into the market throughout the trading day. I rarely trade the 5-minute chart, but it's one that you can trade if you wish once you've got the gold on steroids. Now the situation is now we have a sell power 64, but note here the gap between the sell zone, the supply zone, and the sell power 64. This is not converging. We don't have any negative divergence either, so this is not something that we might be interested in at this moment in time. Let's flick down to the market. Now, one thing for sure, as I mentioned earlier today, the DXY dollar is flat as a pancake within a very, very tight range, not doing much. This is a 4-hour chart. There's a very high possibility this is going to bounce high into the next few days, heading into the Fed rate decision. But until that decision arrives, then we won't know how the dollar is going to react. Yen futures are looking higher, but as we can see here, it doesn't, again, very, very mixed markets here. Very unusual. We can see that this price is just going sideways. Once we get convergence up here, then we can expect the price to actually fall, which gives us opportunities to buy into euro yen, pound yen, and so on. But at the moment, really, there isn't much we can do. Just sit on our hands and wait for the positions to come to us, which is fine. We don't mind doing that. Sell power 72 on the Swiss franc futures. This is interesting. Divergence as well. So that indicates the price is going to do this into the next few days, which in turn means the Swiss franc is going to go higher. Euro Swiss, pound Swiss, and so on. Of course, the indices, all the indices are flat as a pancake. They are not making any decisions to go long or short at this stage. Dow Jones is heading sideways pretty much, probably going to go up, but who knows until we get the decision on Wednesday. Same with the Nasdaq as well. This is no longer valid. I want to talk about valid trades and invalid trades. This is really, really important in terms of coaching, so that you can actually make better decisions into your trading journey. Just having a look at oil, see what's going on. I'm expecting another bounce into oil, but really nothing going on at all. We've been holding this for a week or two. Euro dollar, converging. So probably going to sell off. So this indicates and agrees with the DXY. The DXY is saying it's going to bounce up. Euro dollar says it's going to bounce down. Reject down. Pound USD. So let me just talk about rejecting or having an invalid trade. So at last week we had a valid trade on the pound USD. You can see that here. But this is no longer valid, this one, because we don't have a supply zone. Well, that can happen during the journey of your trade. If you have a supply zone at the same time converging, then of course it's quite valid to expect the price to be rejected into this area. But while there is no supply zone, as we can see, there is a massive gap here. So that gap needs to be filled, or the supply zone needs to be merged with this area here, or this gets pushed up into this area and we see some kind of convergence. Now, the useful thing about this in particular is the way we trade. If the trade becomes invalid, just close it down, lose 20 pips or whatever it is, very small, very small losses, if you like. So if you're risking, in this instance, we've got a 35 pip stop loss and a massive 4.54 risk to reward. The rewards on this are enormous. And so if the price gets rejected, as we expect from the analysis we've done, the DXY is likely to bounce higher based upon our probability factors, then of course the chances of this being rejected at this point is very high. Now what can happen is, as we spotted during the last few weeks, as markets have been very quiet, it can push up a little bit, and this yellow zone, the supply zone, disappears. And so we can say, right, okay, let's close that and wait for another day. And you just take a small hit on that. So Aussie USD looks like a good selling opportunity. But don't forget, it can go any way based upon the fundamentals. If interest rates aren't changing, then that will change everything in terms of the DXY. So the US Swiss, I got bored with this. I'm not really bothered what this is doing, but this is still valid. So we can expect the price to bounce off this area here, 79.26. We don't really have convergence, but it's very close, isn't it? The gap is very small. So you can have a stop down here, 78.60, somewhere like this. But let's see what happens on Wednesday. Let's not make any rash decisions. Let's think about other trades which could be more valid for us. So the miners are likely to continue into this week. Just flicking through. When you see a trade like this, the US Canadian, you can see this is just drifting. There's nothing interesting about this. When it's drifting in between, this demand area means nothing really at this stage, because it's not a strong demand area, it's not a weak demand area, it's nothing, it's just floating. So we're not particularly interested. Same with the US yen, just floating around, waiting for the decision. Euro Aussie, again, if you see this straight away, ignore it, because it's not converging with the demand area. Once it converges, we're more interested. Pound Aussie is much more interesting. This was sent as a signal, so if you got in on this one there, then great, happy days. Nice 2 times risk to reward, 287 pips. This is what you're looking for. So once you have the Advanced Pro charts, you're looking for a buyer power above 60. You're looking for convergence. We have that. And you're looking for divergence, positive in green. We have that. The divergence indicates that the price is moving down, but it should be moving up. It's telling you in advance the price is going to bounce. How far it goes, we don't know. Now, one thing I would say, now the Euro Canadian put a signal into this one, but the price and the chart has become invalid. We don't have a supply zone at all. So this is probably going to continue up for now. Pound Canadian is slightly different, or massively different actually. This is much more valid. because the price is coming into a sell power of 63, and we have negative divergence. So convergence, divergence, sell. And we've gone for 6.85 times risk. 44 pip stop. Now, if the price continues to go up, the sell zone, the supply zone becomes it disappears, and so the price becomes invalid. The trade becomes invalid, even if it shoots down. So what's likely to happen in the next few hours? Hopefully, you're going to see this continuation down here, and you squeeze as much profit as you can out of it, especially in these quiet markets, because you want to make sure that you squeeze as much as a 21.6% chance of this price going up, okay, or reversing up. So it's very, very, very small chance, actually. Once you see it all go green, you're just going to squeeze as much profit as you can out of the market. Just flicking through very quickly. No, not valid. Very quickly, not valid. Get the picture? This is how quickly you can do your own analysis. Doesn't take any time. Euro Swiss is going up and making money. Heading for 93.80. Congratulations. Much more valid. You can see it. Not valid. Not valid. Valid. Canadian Swiss is going to go up. You got the signal. If you're in the signal room, you've got the signal. Don't ignore them. Now the yens are mixed, as I did explain earlier. The yen futures dictates the direction, and we are expecting, once we get convergence, we haven't got it, then of course this is going to go down, which indicates that the yens are going to go up. Nothing is valid at the moment. Not valid. Valid. Making profits, heading for 107.81. So as the yen futures converges and then starts to move down in the next 24 hours, it will drive the Canadian yen up. Well, that's the theory. Bitcoin, congratulations. I did put this in there, but there's not a 2-to-1 risk to reward here, so I didn't throw it in the VIP room. Congratulations on this 7,888 pips. Congratulations. Now the euro pound is interesting. It's not completely valid, but I want to talk about continuation patterns just to help you. So there's a couple of things here which is interesting. First of all, it's not in a strong demand area like this. This is heaven. This is perfect. This is perfect. But you do have positive divergence indicated by the advanced pro chart in a weak demand area. So how can you use this? Well, you can use this as a platform for a continuation pattern. So if the price decides to move above the 20 SMA and finish above the 20 SMA, you could possibly have a 2-to-1 risk to reward here somewhere. Now, how can you confirm that? Well, the price has to finish above the 20 SMA, because it's not a reversal pattern, it's a continuation pattern. And so what we can do, we can just go do something like this. So if the price moves above the 20 and finishes above the 20 SMA and breaks this down trend line here, this very weak trend line, it has to be said, but nonetheless, and not very well drawn, but nonetheless, say if it finishes above there, then you could have a 2-to-1 risk reward back up to 87.10. Just as a guideline, just a bit of a lesson coaching session to help you understand that even though this is not valid yet, it could become valid as a continuation pattern. Just a quick look at, that's got rejected at gold at sell 65, but not valid for us, outside bar, but not valid because we don't have convergence. The chances of this price going up are quite high still, so we could see the price do this, rejected here, down to here, up to there, don't forget gold is also waiting for the news on Wednesday. So if this merges, convergence, remember, together, and we have divergence negative, we don't have that, then we could see this sell off back down to 36.50, which would be nice, 200 pips.